Bonjour à tous. Comment on a...
Good afternoon, everybody. We only have 25 minutes, so let's start now. I'm Rémi Godot. I'm the director of L'Opinion, the editorial director. I'm very pleased to be the moderator of this controversy. The title, if you haven't seen it, it's How Can We Better Finance the Europe of Tomorrow? To answer this question, I would like to introduce two major actors on this topic. Hello, Slavomir Krupa, you're Director General of the Société Générale Group and the President of the European Banking Organization, and Grisy Checa, I hope I pronounced your name well, you're Director General of the Spanish bank Santander. So, without further ado, you remember that Mario Draghi not long ago said that Europe needed 800 billion euros per year for 5 years to invest in its future and avoid being left aside from the US and China. It was in September 2024. And a few months after, another report that made a lot of noise, that of the state of Enrico Letta, I'm sorry, he's saying that there was a priority and urgency is that to create a union of savings and investments in Europe. He was talking about an integrated financial market in Europe. So we've been talking about this for 15, 20 years. It still take years to create it, but everybody recognizes that there's an urgency in investing now. And that would be my first introductory question, Hector. What is the priority for you? Do we have to manage the long term, short term? What do we need to do to speed up, give a momentum to this project of the Europe of tomorrow?
Sorry, comment allez-vous? I'm sorry I don't speak French. I'm going to do it in English if it's okay for you, or Spanish if you like it, whatever. Anyway, what you have said is quite important. I do believe that what Europe doesn't have is time. Time is of the essence, and Europe needs to move itself quite fast. I think we have quite a lot, I would say, of overdiagnosis of what needs to be done. On the other side, we know exactly what needs to be done, but what we need is to act now. What Europe needs and really needs is growth, and we need to get to this growth through competitiveness. And you were talking about the savings and investment union and everything and all the opportunities that we have, but we cannot wait for it. What we need to do is basically understand that Europe needs, you were talking about 800 billion of investment. My point of view is we need between 1.2, 1.4 billion of investment per year, trillion, okay, euros. And that's exactly what we need to focus on. We need to make Europe attractive to investors. And instead of exporting 300 billion of euros to other parts of the world, to make the Europeans invest in Europe. And we need to do it right now. And what we need is not nothing more than make the market attractive to it. And that's exactly what Europe needs to do. Europe, in my opinion, has everything, but we really need to get our act together in order to push for it.
Slavomir Krupa, vous partagez cette analyse?
Slavomir Krupa, do you share this analysis? First priority, growth, conditions of growth?
So yeah, of course, I share this view. And we have been in Europe over the last, at least over the last 15, 20 years, focused on resilience only, right? So it's like there was a broad consensus at the political level that what we need to do is to protect Europe, protect the citizens against, I'm not sure what exactly, but for sure against themselves, right? A lot of regulations, going back to Savings and Investment Union, are the politicians at the European level telling you, me as an individual, how we should invest and what we need to do, how many tens of pages we need to sign before we can invest our money in equities and so on and so forth. We've been focused on resilience, and resilience doesn't deliver growth. It's important. It's what levels the impact of crisis, and clearly we had one 18 years ago, which was significant, but being focused on resilience doesn't produce growth, and wealth creation, prosperity, people's well-being in the end, across all of their needs, from healthcare to education to opportunities, etc., relies solely on growth. And if we don't change that mindset, I think, frankly, we're finished, right? And at best will be two things: the downtown of the world, where people come to see beautiful places and go to museums and whatever, if we have money to finance them. And the second thing we're going to be where people will be outsourcing the low-quality jobs ultimately, while they're going to be innovating in China and the US and elsewhere.
Alors on rentre un peu dans le dur.
So we're really in the nitty-gritty of the discussion. Too many regulations kill investment or restrict investment. Too many regulations. So what should we know to do to unlock the situation?
Too many regulations, not only well, kill regulation, I don't know, but for sure kill activity, but also risk management. I had recently a conversation with a guy, one of the big regulators in the US, and we were recounting the story of Silicon Valley Bank that went bankrupt. And one of the comments he was making is they had 80 or 100 feedbacks, I'm not going to go too technical, feedbacks from the regulator of all the things that they were supposed to do, like 100 MRAs. You know what MRAs are. And he said, well, but among these 100, there were two about interest rate risk management. The reason why the bank went bankrupt. And yes, if you have 100 things that somebody is telling you that has power over you, that they're all super important and that you have to deliver them all fast, etc., regardless of prioritization of what's more important, eventually you're going to miss the actual risk that's going to kill the bank, right? So clearly, the smart regulation is the one, and supervision, it's not only about regulation, is the one that focuses on the risks and makes sure that you deal with the risk while you can do your job, which is, our job is to take risk, right? That's what we do, that's our job, and we should be empowered to do this as much as we can, while, of course, the regulator should protect the society and the economy from us doing stupid things, but not from us doing our job.
En tant que président de la fédération,
As president of the European Banking Union, what are the recommendations you make to unlock the situation?
Long and boring, or
2
short?
minutes.
Okay.
1 minute.
So if it's 1 minute, two things. One, it's about capital, right? We talk about competitiveness and this and that, and everybody means something slightly different, and in the end, we spend hours talking to each other without understanding anything about the topic that we're discussing. It's about capital. We are accumulating capital in Europe for no reason. By the way, ignoring that most of the time, banks don't go bankrupt and don't provoke systemic crisis because of shortfalls in capital, but because of shortfalls in trust and in liquidity. And so what we're doing, there's an obsession at the European level about accumulating capital. And so we are accumulating capital. And capital is what? Going back to your very first question, is financing capacity. Each euro of capital that we have to freeze somewhere in a regulatory requirement, I don't know, whatever, is 15 euros that we're not financing. So when we ran at the EBF a survey of the top 15 banks, in the last 5 years, the regulator has frozen, I'm not going to be too technical, but has said to the top 15 banks, you need to put aside, on top of all the regulations, it's on top of everything else, you need to put aside 150 billion of capital, that's 1.5 trillion to 2 trillion of financing capacity that we will not deliver to you, to your firms, to the European economy because of the supervisory burden that we get through this. So the number one topic is stop freezing capital while the US is reducing by 160 basis points roughly a financing capacity of $2 trillion. The UK is reducing by roughly a little bit less than $1 trillion, and we're increasing capital again by 1.2. So we're not even asking for anything less, just stop the craze. Stop adding. We don't want to deregulate anything. We just stop, right? And let's move on from this point.
Ettore Grisicheka, vous
Monsieur Cheka, Gracie Cheka, we don't like to deregulate your. What it boils down to is avoid adding layers, making it simple. What is the strategy?
I think Slawomir basically put it in the right way. Banks don't need more capital in Europe. We have enough capital to sustain whatever we need to sustain. The important thing on what the regulator and the supervisor need to really look at is at basically that the model that every single bank is profitable. This is about profits. When a bank goes under, it's exactly because of that. When the model doesn't work, it goes down. And important thing is to have models in our banking system that are profitable, which I believe all the banks in Europe have. Okay, so it's important to understand that. It's also very important to understand and to put things into perspective and how regulation it is. Just in the case of Santander, for example, last year, I'm talking about year 25, we had more than 450 meetings with the different supervisors. This year, we have 600 on the agenda. 600 meetings with the regulator. You imagine the amount of resources, people, preparation of everything that we need to have behind in order to do that. So the supervisor needs to understand that. And also, there is one very important thing. The supervisor needs to understand that it's not that we want the regulation, because we don't care. What we want is for them exactly as Slawomir is saying, for them to stop and to let us do our job, which is exactly to push economy. And this is the basis of the thing. So if we have a profitable model, a model that makes money, there are huge opportunities in Europe. And we need to basically be able to tackle them. And this is the important point.
Mais au fond, est-ce que le régulateur, il n'est pas...
Isn't the regulator like the Europeans? Doesn't like risk, you know. It's the Europeans don't have the culture of risk today. Do you agree with that? It's cultural.
I mean, what happens is people basically don't want to go through the same problems again that happened in 2008 and 2012. But Slawomir said it in the right way. People need to understand that the banks are basically there to undertake risk, and we have the capabilities and the models and the right infrastructure to be able to take the risk in the right way. What the regulator need to understand is that they need to take a point of view of that the model is profitable on the long term. What they cannot basically is limit the model. They need to understand that, for example, in the case of us, that we operate in different countries around the world, the amount of capital that we need to put in the US vis-a-vis an American bank, right now we're buying a bank in the US, we have to put 160 basis points more on capital on our balance sheet just by taking over the same portfolio that we have in the US. So by operating a bank in the US, we need to put more capital because we're in Europe. And that basically makes us not being able to have the same level playing field as the American banks to compete. I mean, the number that Slawomir was talking about, the 2 trillion, is exactly that point. And what you're seeing is that you see a Europe that can come in, and it's not the same because the American banks are coming into this market with a lot less capital constraint to be able to compete against us in a different basis. So they're going to kill us in the middle.
Slawomir Krupa, c'est...
Just to add one quick point, it's in 25, we have increased lending in Europe by 1%. The American banks have increased lending by 10%. That's it. I mean, it's mechanical, right? It's mechanical. That's one point I wanted to make. The other one is, I was recently at another panel in a conference in Paris with a brilliant Chinese entrepreneur in the energy, renewable batteries, and vision. I'm sure you guys know them. Brilliant guy. And he had this great answer to the questions, but what's the gap? What's the problem? Why are we different? Why aren't we taking risks? And he said, you guys have, well, not an investment gap, the Draghi thing. You have a mindset gap. I love this concept. Yes, we have a mindset gap, but frankly, I'm sorry to say this, more the authorities than the entrepreneurs, right? Take all the great firms in France who are competing all over the world, right? in energy, in aircraft, in all kinds of construction industry, military, etc. Great companies in energy, in telcos, in banking, in Spain, etc. I mean, the entrepreneurs, the citizens, they actually want to move forward. They want to grow. They want to, be wealthier. They want to have a better life. I think, we need to change the mindset at the top.
Alors, on a des banques qui veulent prendre plus de risques. On a énormément.
Banks that want to take more risk. We have a lot of savings in Europe, but there are 300 billion euros of savings that are invested outside Europe every year. So who's responsible for that? Who's responsible? The politics, the tax system, the banks, or the state of mind? How can we unlock all this? There's money.
Mindset, again, right, going to my earlier point, it's the mindset because, that same money that apparently, right, doesn't want to go, at least in size, into Europe, goes in billions into SpaceX, right? We actually were distributing the IPO on the retail side in France. We had the exclusivity. There's a whole bunch of people who decided to invest in this. And in the end, it's this mindset, because also when I travel, and we both travel a lot, I mean, the Europeans that live in Dubai, the Europeans that live in Silicon Valley, or I could almost say the French that live in Dubai, 50,000 people, the probably hundreds of thousands that live in Silicon Valley, I mean, they're French, right? And they're investing, they're taking risks, they're doing this. It's a mindset thing, and an understanding that in the end, what we need to seek is growth, and that we all focus on supporting growth.
Hector Grzycka, vous considérez, vous, que c'est
Hector Grzycka, do you think that it's the role of Santander to make sure that Europeans invest in Europe, in Europe, or is it just a political matter?
I mean, it never can be the role of the banks to make people invest in Europe, okay? So it's very important to understand that. What we need to do is to make Europe attractive, as I was saying, to investors. This is the most important thing. First of all, when you have growth, and when you have opportunities, and I'm very optimistic about Europe. Every single time I travel and I visit the different countries, I see hundreds of opportunities. What we really need to do is to be able to show the market that these opportunities are there. Also, for governments to really project, what we need to get rid of is the fragmentation. What is killing Europe is the fragmentation. People need to think as one. If you think as one and you really make things happen and concentrate on that, then Europe will change. Money is fungible. Money goes where the returns are. Okay? And if the returns are in Europe, and you have seen it, when the European banks started to get the right returns, money came back, and look at the valuations today. So it's very important. As I was saying, the model has to be profitable in order for investors to come in. And money will come because Europe is wonderful, has tremendous opportunities. Just go back to 2000, I was an investment banker in that time. Europe was the land of opportunity in telecommunications, the leadership in telecommunications. Back in 95, 98, 99, it was Europe. Europe was managing that thing. And it lost the edge because we started with regulation.
Oui, mais alors Hector, moi je
I would like to respond to that, to follow up on that. For 20 years, 15 years, we've talked about this single market of capital. It's still not there yet. And we wonder, what about it in 10 years? How can we be optimistic about it?
What we need to do is, crises always are opportunities. And whenever there is a crisis, Europe knows how to react. And this is a great opportunity. When I saw Trump coming in and people were telling me, the first thing I said, this is a great opportunity for Europe, because finally, we're going to get our act together and do things. And start basically, and it's exactly what we ought to do. So when there is something that is menacing or ruining your structure, this is exactly when you move. And this is exactly what Europe needs to do now. What I have seen, am I optimistic about it, is for the first time, and here in Brussels, and politicians around there and supervisors in Germany, starting to think about how do we make this attractive? How do we make this competitive? And how do we really push forward so people start investing in Europe and in the huge opportunities that we have? But as I couldn't agree more with Slawomir. mindset.
Vous partagez cet optimisme?
So you agree with this optimism? Yeah.
I would say that first you had these Draghi and Letta reports. People started to talk about them. Yeah, it's important, blah, blah, blah. But not much has happened. But I sense this spring, and you can actually read it in the conclusions of some of the European Council meetings, etc. Things are slightly changing. And the narrative at the top will drive change in mindset eventually, and I think it's important. It's unfortunate that it takes years to get there, but I think there's momentum today that was not there even 6 months ago. Maybe Greenland actually, increased that momentum. Whatever, if the momentum is there, I'm optimistic.
Alors, il nous reste...
So we have 2 minutes. You have 1 minute each. Do we need a lot or not a lot to make sure that we counter the decline by investing? Because this is actually the subject. Hector, 1 minute.
I mean, it's exactly what I said. We need to have one set of things and we need to act right now. What I'm trying to say is basically that we need to forget about the differences and concentrate on what's better for Europe. And if we're able to do that, and we forget about the difference and who's the champion where, etc., and we really create one market for all, Europe is going to be tremendously competitive because it has everything. A market of 350 million people. We have a huge amount of savings. Not even the Americans have this amount of savings compared to the size of their population. Acquisitive power, we have a great market, so the opportunities are there, we just need to get it done.
I would say, in the spirit of what we tried to say this afternoon here, it's really about tilting a little bit the mindset, changing the attitude, a lot at the top, a lot in Europe, in terms of the European administration, but also a little bit ourselves, and think more. I'm not afraid of what might happen, but I'm super excited about what could happen, right? This is what we need to change. It's both nothing, and clearly it's in our hands collectively, in the hands of our politicians, which we elect, but it's also a lot, right? So, but we're optimistic.
Merci beaucoup à tous les deux.
Thank you to both of you. Thank you.